What's going on, guys? So this is actually the second time that I'm recording this video because in the last video my audio was off. So if you guys could please do me a huge favor, like this video, subscribe to my channel, re-recording this video for you. But we're going to go ahead and get into how to scalp or day trade the opening range breaks. Okay, so this is going to be for day traders. This is not going to be for swing traders. This is not going to be for long-term investors. This is not going to be for people who believe that the stock market is overvalued or undervalued, or stocks are going to the moon or going to the, to the dirt. But this is going to be for people who are just looking to day trade. You guys are looking to get into the market. You guys are looking to make some cash flow, get out. This is for people who are disciplined, who can stick to a trading plan, have a good set of rules in place. And, over time, you're going to compound your earnings to be able to grow your account size. So with that being said, what we are going to be looking at here is pre-market lows and pre-market highs. So I'm just going to make, what I'm going to do here is I'm going to make the pre-market lows or highs green so we can see it a little bit better. And I'm going to make these pre-market lows red so we could see this better. And then what I'm going to do here is we're going to wait for the 5-minute candle to give us that opening range. The stock that we're watching is Qcom, so Qualcomm. You see here the market opens at 6:30. We put in this big, nice long wick here. We get a high of 192.68. This is going to be our opening range high. Okay. Then we're going to come down here 188.15. This is going to be our opening range low. So what we are looking to do is looking for the price action to take out the pre-market high or the pre-market low. And as soon as we do that, can we confirm that opening range candle? If we can't, that means we're just stuck in a range. And I've seen this happen before. We put in this big opening range here. We kind of pop back up. Maybe we peekaboo, we come back down, come a little bit farther, and then we kind of just trade like this all day. And then we come all the way down. This is just called trading in a range. However, today we know the stock market was very, very aggressive to the downside. So with that being said, if we just take a look at what setup presented itself, because again, when you're a day trader, what the stock did yesterday does not matter. What you think the stock is going to do tomorrow does not matter. All you're trying to do is take advantage of the volatility to the long side or to the short side. Now, with that being said, you do want to kind of check market conditions. Is the overall market selling off? Are we flat? Is the overall market pushing higher? This is going to kind of dictate where your stock is going. In this case, the market started off pretty much flat, a little bit. I think it was even green a little bit. The futures were, and then we started to pull in aggressively, and then we started pulling a little bit more, and then we were down, and then we're down bigger. So with that being said, if you're trading a tech stock, your stock is going to follow the triple Q. So just kind of keep an eye on that index. So like for me, when I'm trading tech stocks, whether that be Apple, Qcom, Microsoft, AMD, Facebook, Tesla, Nvidia, when I'm trading these stocks, I got my eye on the stock on one chart and I'm looking at the triple Qs on the other chart. Are we pushing higher? Are we trading sideways? Are we breaking down levels? If we're breaking down levels, I'm confident we're going south. If we're breaking up higher, I'm confident we're going to go higher. So with that being said, what we are looking for here is a confirmation of the pre-market low, and we're looking for a confirmation of the opening range low. Okay. So in that case here, you can see that 6:30 in the morning, 188.15. We do trade sideways, 5-10 minutes. We do break below. This is going to be your entry here. Okay. So again, stomach the volatility because again, stocks can bounce before they go down, and stocks can, flush before they go higher. So as soon as we get this confirmation breakdown below the pre-market lows, below our opening range low candle, we're going to get that at 6:40 in the morning. We're going to quickly snap below that. We're going to get pushed back up. However, I'm confident to stay in the trade. 2 reasons. First reason being we're still trading under pre-market lows. Second reason being we are trading under the 20-period moving average on the 5-minute time frame. As long as those 2 things are lining up, I'm still confident to hold this trade. If this candle here at 6:45 or 6:50 in the morning snaps over the 20-period moving average and breaks this pre-market low, I'm going to exit the trade. That's your risk management. That's all you have to do. Just follow the rules and stick to the game plan. You can see here At 6:55, we get that flush. 7 o'clock, second hour candle of the day opens up and we get a massive flush. That first flush down is going to take us to a stock price of 186. If we entered here, guys, if we entered at 188.15 or as close to that as possible, let's call it 188 with slippage. If we went from 188 to 186, we just got a 2-point move in our favor in a matter of 10-15 minutes. Okay, you're more than welcome to take your profits off of the table here. Sell some. If you have some runners, go ahead and leave those runners on the table. As long as we're trading, again, below the 20 period moving average and below pre-market lows, I'm confident enough to hold this trade. So we get 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, about an hour and 15, hour and 20 minutes worth of sideways consolidation. You can see here the 20 period moving average dragging below it. We never cross above it, meaning that we're going to continue to hold this trade. That second push down is going to give us a stock price of 184.53. Guys, that's a 3.5 point move. We get a little bit more consolidation here, a slow fade, one quick pop up. However, we still are trading above the 20 period or below the 20 period moving average. Confidence is still to the downside. We get this next massive flush here, 181, 182, guys. That is a 6-point move in your favor, 6-point move in your favor at around 10 a.m. Okay. If we just take a look at when you enter this trade at 6:40, coming all the way down here to 10 a.m. Where's that 10 a.m. candle at? Right in here in this range. It's actually 10:15, 10:15, 10:20, 179.47. I mean, Qualcomm just put in a nasty candle today, down 11 points. But if you were to get into this trade, follow your rules. You could have rode this trade all the way down, guys. 8 points, 7 points, 5 points, 10 points. I mean, from an entry point, from a clear entry point here to the lows of the day around 11:40 at 176.11, at 176.11 is a 12-point move in your favor. If you're playing options and you go at the money, in the money, or just right outside the money, your contracts were in the money 7, 8, 9, 10 points. If you took 5, 6, 7 contracts, you're up 100% on your contracts, clear across the board. Multi-thousand day runner here. I actually was in Qualcomm. I only took 3 contracts. I did play it light just due to the volatility this week. I started off going long, actually, tried to jump the gun here and go through pre-market highs, quickly got stuffed here at the opening range highs, and as soon as it fell through the pre-market highs, I had to exit this trade here. However, I seen the opening range come down here to 188.15. I let it consolidate a little bit, and then when we got this flush through here at around 6:55 in the morning, I was pretty confident, just due to the way the market was selling off, to enter into this trade here. And then I exited around 9:25, around 9:25, 9:30. So that is, if I just look at it here, around 9:30. Yeah, when we got this green candle up here, I thought maybe there was a potential for a reversal here. And that price was 181.20. And I entered in around 188. So you can just kind of see the power of that move, 6 to 7 points on that move to the downside. There was more room to go. However, you know, that's what it is when you scalp. You're never going to get these drastic moves like this every single day, but you kind of just have to take advantage of what the market is giving you. This could have completely came down here to 185 and then snapped back up higher. But so normally, you know, I like to tell people, you know, take profits. You go in the money 1, 2, 3 points, start taking some profits off the table, hold a runner if you're holding more than one contract. If you're playing equities, you know, scale out 1/3 of your position and then another 1/3 of your position every $1 or $2 down that the stock goes, and then kind of set your stop at break even at that point, and just let your runners continue to run. But I hope this helps, guys. Just a quick, maybe 20, 30 second recap. What are we looking for on trading the opening range breakout or breakdown? We're looking for the pre-market high. We're looking for the pre-market low. We're going to wait for the first 5-minute candle to open up. We're going to take that opening range high and that opening range low. Then from there, we're looking for price action to confirm either the pre-market low and the opening range low to the downside. Our stop loss would be any close above the 20 period moving average or above pre-market low. And if we're playing this long, what we're looking for is a break above pre-market high, a break above the opening range high, and then our stop loss, if this move fails, is below the 20 period moving average or below our pre-market high price. I hope that helps, guys. If you could do me a favor, tremendous favor, and subscribe to my channel, join that Discord. That link is down in the description box below, and I will see you guys all on the next video.